Mutual funds versus ETFs. What are they and what's the difference? Financial advisors are projected to hold more assets in ETFs than in mutual funds by 2026, by next year. So there's a shift in investment preferences, and I want to go over why that may be and why ETFs are getting so much more popular. Both mutual funds and exchange-traded funds, ETFs, are basically baskets of investments. So instead of buying just one stock, you're buying a mix of them all at once. So they provide diversification and can hold a variety of different investments like stocks, bonds, even commodities. One of the most popular ETFs is SPY. You might have heard of it. It tracks the S&P 500. A classic mutual fund is Vanguard 500 index. You might have also heard of that one as well. So what's the difference between these two? A mutual fund is more old school. You buy it, but the price doesn't get locked in until the end of the trading day, when it's usually at 4 p.m. Eastern time. Now, ETFs can be bought and sold anytime during market hours, just like a stock, which gives you more control and flexibility. Then there's the money part. Mutual funds usually come with higher fees because they are actively managed. ETFs usually have lower fees and are more passively managed. So let's talk about taxes. This is another big reason why ETFs are becoming more popular. Mutual funds can surprise you with a tax bill. ETFs are built to be more tax efficient. When a mutual fund has to sell investments, maybe because other investors are cashing out, it can create a capital gain inside of the fund. That gain can get passed on to everybody in the mutual fund who owns shares of the fund, even if you don't sell anything yourself. Now, ETFs instead use something called an in-kind redemption process. That means when big investors want to cash out, the ETF can trade shares for the underlying stocks without triggering a taxable event. So fewer trades inside the fund and fewer surprise tax bills for you. That's why ETFs are becoming more popular, and by the end of next year, they're supposed to have more than mutual funds. They have lower fees, easier to trade, and usually are more tax efficient. So next time someone asks you if you should invest in ETF, you'll actually know what they're actually talking about. If you found this valuable, please give me a follow, and remember that wealth is nothing without health. Have a great day, everybody. Bye.